Let's go over to our man, Mr. Teddy Kekstadt, as we do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day, folks, at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Kekstadt, what's going on, brother?
Well, we got a little mixed bag of goods going on with the currencies today, especially now that we have new tariff agreements that have to be made between the U.S. and the EU and the U.K.
What are they going to do with our champagne and our gin, man? What is he doing?
Yeah.
Holy cow. I'm telling you.
I know, and even us exporting whiskey too, right?
Yeah. My God.
I know. Why do they have to mess with the necessities of life?
That's a no-win situation, man. We'll find out where it shakes out. But bottom line, folks, we'll see where that shakes. It's wild. The whole thing's wild. So the dollar saved itself again. You know, that dollar. You know what's so interesting, Teddy, is that the first leg down, March, we hit the low. June 10th. It hit the highs of the lows, rejected it. Yesterday, we hit the highs of the lows of June 10th and rejected it. So where do we stand now?
Well, you know what I think we have going on is, remember a couple weeks ago we were talking about the U.S. dollar getting a slight correction, which is what it did so far.
Yes.
Now I think that what we've seen over the past couple days, we had a little sell-off in the dollar, but today we see a little bounce going on, and it's happening in the majors. There hasn't been much action going on in some of your lesser currency crosses,
okay.
But I think that you're going to see some action now over the next couple days where we're going to start to see some divergence, and I think it really has to do with the U.S. stock market being kind of on shaky grounds. And remember we were talking about the metals markets over the past couple of weeks,
yes.
And how now gold is obviously seen a nice little rally over the past couple of days, while silver still has been kind of lagging.
Oh, yeah, they slammed silver this morning. It's making its way back right now, but they slammed it. Yeah, no doubt.
Right. Well, so this is what tells me is that since we have a little bit of divergence going on with your metals, and then also we have the interest rates that have been kind of like narrowing once again, then now we're looking at an equity-based trade. And I think that the stock market is kind of on shaky terms. I mean, obviously your tech stocks like Apple and Tesla and Amazon, they're going to keep on rallying no matter what happens, So, but the broad-based S&Ps, though, I don't like the fact that the dollar and how certain currencies have gotten their trends over the past couple months. The stock market had a nice little rally, but we failed to make new highs. And the way, I was in the S&Ps for a long time, and it's natural for me to want to always sell that market. However, right now, I think we are setting up for a nice little correction. And the only reason I say that is because, especially as we start to see a second wave of coronavirus in the United States, now globally it doesn't seem to be such a big deal. But if in the United States, if there are certain sectors that, especially a good portion of the country, that starts to fall into a lockdown situation, this is going to have another big impact on the stock market for sure.
No, I thought yesterday, it was very surprising, and the day before that, we had the NASDAQ hitting all-time highs, and the S&P couldn't catch a bid. We're up $20, folks, but the S&P $20 now is not a big deal. It's like that's like being up 2 points. If we were talking 6 months ago. Yeah, I could see it. It was like, okay, that's a big number.
I think that's going to cause a dollar bid to happen. So because if you think about this, oil is kind of tapped out. I heard you guys listen. You guys have the oil report always before I come on. So oil, we know that demand is obviously going up. There's more cars on the road now in Chicagoland than we've seen. And I went out for the first time to a restaurant last week, and I took an expressway that for the past 4 months you could get on at 2:30 in the afternoon and there's no cars. Wow. For the first time there was actually traffic. So I was amazed at that. But I still think that demand isn't going to be that exciting for the next couple months. And as long as that stays stable, and especially with interest rates where they're at, you got to figure, where's money going to go? Well, I think if money is going to be money, then money is actually what's going to be moving, So, and I think the U.S. dollar is going to get another leg up just because of the way, if it was really negative, if this was just a downside correction, a corrective move higher that dollars had over the past couple weeks, we should start to see much more hitting of support. We should see the majors actually starting to look very strong. And the euro is not looking too strong versus the dollar. The pound is looking very, it's weak versus a lot of currencies, and especially with these trade agreements. I mean, honestly, I can say that I don't think you're going to see an agreement between the EU and the U.S. probably for at least 3 to 4 months. Probably not, at least until right before the election.
All political rhetoric, right? I mean, that's we're going to be hammering everyone before the election. I mean, that's
sure. Except for the UK,
that's going to be the normal, mantra, right? I mean, there's no doubt.
Well, I think that the UK actually might be the one in difference on that one, So I think that if we can get a deal with them, that I think has a more likelihood to happen before the EU, just because of the fact that it's going to be an easier negotiation, and also politically right now, we don't have I guess you would say the friction so much with the UK as we do with the EU.
Right. That's right. Yeah. It's almost like a new country now that it's out of the right. I mean, there's going to be new alliances. Well, there has to be new, basically, agreements, right? There's no doubt about that. So,
sure, and you got to remember that the UK is an oil-producing country. The EU is not an oil-producing union.
Wow, that's true. Yeah, right. They get the North Sea. So interesting. Yeah, right. Okay.
So, but I think that we're going to start to see more of a dollar surge over the next week and a half, and it's more. I think it's a flight to quality thing because interest rates aren't moving. We know you're not going to get any action from the interest rates. So, and the stock market is too confusing now, like you guys were talking about, and I said before, the NASDAQ could keep on railing for the next 2-3 years while the other two markets could be sideways to lower, and I think that's starting to become a big confusion for a lot of investment players out there.
Well, when Tommy, I don't know if you heard me, when he's going over these market caps of the tech stocks versus the Boeings and the Walmarts and the things that Procter & Gamble's, that was amazing, man. I mean, they're tiny companies now compared to when we're talking the tech stocks, right?
But what does that remind you of, Tommy? This happened before.
Yeah.
2000. Remember in the 90s? Yeah, exactly.
I know.
Right. I mean, how long can a fantasy company run on a huge market cap? Eventually, you have to make a product. You have to show profits. You can't just have an inflated stock value.
Right. Right.
Don't let Jeff Bezos hear you talking about his company like that, Teddy.
But you know what, Tommy, I wish I could have run my company for 10, 15 years at a loss and grow it to such a huge size. I mean, I don't know how you could pull something off like that. So, I can't compare myself to Jeff Bezos. I never would.
No, I joke, man. It's staggering, man. It is. I mean, and the multiples are still huge on some of those companies. So that's where, $1.5 trillion, and one of the starkest ones I brought up, Teddy, was Walmart's at $300 billion, and it's like, really? Sure. Microsoft $1.5 trillion, Apple $1.5 trillion, Amazon $1.3, and Walmart, the biggest employer in the nation, $300 billion with stores everywhere.
I know.
Exactly. Yeah, it doesn't make any sense whatsoever. And I think that that's a bubble that, what would happen if you had fair value actually have to come into those stocks? What happens if Amazon all of a sudden falls under an antitrust suit?
Yeah.
So, I mean.
How about just to throw Target? I just found it. I couldn't even find it. $60 billion. Target. They're a huge company, man. Yeah.
Right.